Hi, everyone, and welcome. If you get dividends here in the UK, you might be wondering if tax is being taken off before that money even hits your account. Well, this overview is brought to you by the folks at My Tax Accountant, and we're here to clear up all that confusion. We're going to break down the rules around UK Dividend Withholding Tax and show you exactly what you need to do to stay on the right side of HMRC. Okay, so picture this exact scenario. You're waiting for a dividend payment, you're expecting the full amount, and then it lands. But there's a chunk missing. It's a shock, right? But here's the thing, and this might be the biggest surprise of all. For most people in the UK, this just doesn't happen. Let's dig into why. So let's get straight to it. The single biggest myth about UK dividends is that tax is automatically sliced off the top. The truth is, for almost all dividends from UK companies, there is no withholding tax. They're paid to you gross. And what that means is, you get the whole lot. And this is the key thing you need to remember. The company paying you the dividend, they're not responsible for the tax. That responsibility falls squarely on your shoulders. So when that money lands in your bank account, it's now your job to declare it and pay HMRC what you owe. Okay, so no taxes taken off up front. Does that mean you're off the hook? Well, not exactly. The tax man still wants his share, and believe me, with the rules getting tighter lately, it's more and more likely you'll have a bill to pay. So let's take a look at the actual numbers. All right, here we have the all-important numbers for the 2025 to 26 tax year. Now, you've got your normal personal allowance, but you also get this specific dividend allowance. We'll come back to that in a sec. Once those allowances are gone, you start paying tax on your dividends at one of these three rates, and which one you pay really depends on your total income for the year. And this is a number right here that's causing a lot of headaches for investors. The tax-free dividend allowance is now just £500. That's it. I mean, it wasn't long ago this was £1,000, and even more before that. This big drop means that even a pretty modest amount of dividend income can now push you into a tax bill. Okay, so we've been saying over and over that dividends are paid gross, right? No tax taken off. Well, there's always an exception to the rule, isn't there? And this one is a biggie. This is the one and only situation where you will see tax deducted before you get your hands on the money. Right, so here's the deal. Payments from these things called real estate investment trusts, or REITs, they look and feel like dividends, but technically, in the eyes of HMRC, they're not. They have a special name, Property Income Distributions, or PIDs for short. And the reason is that HMRC sees them as property rental income being passed to you, so they get taxed like it. Let's break down the difference, because it's actually pretty simple when you see it side by side. Your normal dividends, you get the full amount, paid gross, you sort the tax out later. But with these REIT PIDs, they take 20% off the top before you even see it. It's paid net. This can mean you either have to claim tax back or, if you're a higher earner, pay even more. Okay, so that's the theory, but how does this all play out in the real world? What does it actually mean for you? Well, it really depends on your personal situation, and your employment status makes a huge difference. First up, if you're an employee, it is so easy to assume that your company's payroll, the PAE system, is handling all your tax. But that's a huge mistake. That system is only for your salary. For your dividends, you're on your own. And listen, if you get more than 10 grand in dividends, you have to register for self-assessment. It's not optional. Now, what if you're self-employed? For you, it's all about something called the stacking effect. Think of it like this. HMRC takes all your profit from your business first, and then it stacks your dividend income right on top of that pile. And what that means is your dividends are the part of your income that gets taxed at the highest rate. It can be a nasty surprise if you're not expecting it. And finally, for all your company directors out there, now paying yourself dividends is super common, and for good reason. It's usually very tax efficient. But, and this is a big but, you can't just dip into the company bank account whenever you feel like it. There's a process. You've got to make sure you're only taking from post-tax profits, and you absolutely must create a formal dividend voucher for every single payment. It's all about the paperwork. Okay, I know that's a lot of different scenarios and rules. So to make it easier, let's walk through a really simple checklist you can use every year just to make sure you got everything covered and you're in a good position. It's just 5 simple steps. Really straightforward. First, add up every single penny of dividend income you received. Step 2, check if that total goes over that tiny £500 allowance. Then, you need to figure out your tax band by adding your dividends on top of all your other income. Fourth, if you've got over £10,000 in dividends, it's time to register for self-assessment. And last, always check your tax code. HMRC sometimes tries to collect the tax this way, but they can get it wrong. So that checklist is a great starting point for sure. But in the real world, things can get messy pretty fast. When you're trying to balance a salary, maybe some freelance income, and your dividends, especially when the tax thresholds aren't moving, it can feel like one of those impossible sliding puzzles.
Okay, so let's do a super quick recap. If you take away anything from this, make it these 5 things. Number 1, most UK dividends are paid gross, no taxes taken off. Number 2, the big exception is REITs, where they do withhold 20%. 3, your tax-free allowance is only 500 quid. 4, the rate you pay depends on all your income combined. And number 5, most importantly, the ball is in your court. It's up to you to tell HMRC.
Which really brings us to the big question. With these allowances getting smaller and the rules feeling more complicated, are you 100% confident you're paying exactly the right amount of tax? For a lot of people, getting professional advice isn't some kind of luxury anymore. It's just about being able to sleep at night knowing you've got it right. And look, if there's any doubt in your mind, the team at My Tax Accountant are the people to talk to. Whether you need to run some numbers on different income scenarios, or you're a director trying to plan your payments efficiently, or you just want to be sure you're doing everything by the book, they can build a plan that's tailored just for you. All their contact details are right there on the screen. It's worth getting in touch just for that peace of mind.